Have you ever tried to understand the stock market? Imagine a company as a giant pizza. Each slice of that pizza represents a share, or stock. When you buy a stock, you're literally buying a slice of that business. And if that pizza becomes really popular, maybe it's going viral on TikTok or everyone's lining up to get a taste, your slice becomes more valuable. You didn't bake the pizza, but you now own a piece of it. That's the core idea behind stocks. Now imagine the stock market as one big buffet. At this buffet, there are all kinds of dishes. You've got tech tacos, finance fries, energy enchiladas, real estate ramen, and it's up to you to choose what goes on your plate. Some people go all in on one thing, like loading up on nachos. Others try a little of everything. Some foods are safe and familiar, like steamed broccoli. Boring, but you know what you're getting. Others are exciting, risky, spicy. That's how risk works in investing. There are stable companies and there are wild cards. And here's the key: diversification. If you only put nachos on your plate and they go bad, your whole meal is ruined. But if you have rice, veggies, protein, fruit, a balanced plate, then you're protected. If one thing goes bad, you've still got the rest. That's the idea of a diversified portfolio. Don't put all your eggs or your nachos in one basket. Let's talk about volatility. Some investments are smooth and easy, like mashed potatoes. They stay pretty consistent. Others are red-hot chili peppers. They can skyrocket in value, but also crash hard. They're exciting, but they're not for everyone. You've got to know how much spice you can handle. Now, maybe you're not ready to pick individual stocks. Maybe it's all a little overwhelming. That's where ETFs come in. ETFs are like buying a box of donuts. Instead of choosing just one flavor, chocolate, jelly, glazed, you get a mix. One box, many donuts. One investment, many companies. It's easier, safer, and it tastes pretty sweet, especially for beginners. But beware, food trends can be dangerous. Ever seen something blow up in popularity? Like gold-covered sushi or rainbow bagels? Everyone wants it, prices skyrocket. Then pop. People realize it's overhyped and it crashes. That's a market bubble. Hype rises faster than real value, and when it bursts, you're left with regret and an empty stomach. So what have we learned? The stock market isn't some cold, robotic machine. It's just like food. You've got options, choices, flavor, risk. You can be bold or balanced, but either way, you need a strategy. Whether you're a buffet sampler or a donut box investor, what matters is that you start learning, start tasting, and stay consistent.